Welcome to the deep dive. You've brought us some really interesting stuff on Equifax today.
Yeah, a company most people know, at least by name.
Right, one of the big three credit agencies based out in Atlanta, but their scale is, well, it's huge.
Absolutely massive. Data on over 800 million consumers globally.
And something like 88 million businesses, too, pulling in over $5 billion in revenue just a couple of years back.
That's the one. Their influence goes way beyond just those credit scores people check.
Exactly. So today we're diving deep into their critical role in the whole financial system.
It's quite a story. I mean, they started so small back in
Yeah.
1899 as the retail credit company.
Retail credit company. Yeah.
Okay? Yeah, founded by two brothers, Cater and Guy Wolford.
Yeah.
And they literally went door to door.
Door to door. Seriously.
Collecting information on how people paid their bills, writing it down in these ledgers.
Wow. What did they call them?
The Merchant's Guide, apparently. And selling reports for like $25 back then.
$25. Quite a sum for 1899. So quite the leap from that to, well, today.
Oh, definitely. By the 1920s, they were already expanding across the U.S. and into Canada.
And they branched out, right, into insurance reporting.
Yeah, that came later, around the 1960s. Then things started changing faster.
Okay, like going public?
Exactly, 1965. And then computerizing their records in the late 60s, early 70s.
Which I imagine brought a lot more attention.
It really did. Increased scrutiny, and then the Fair Credit Reporting Act, the FCRA, in 1970.
Right, giving consumers, actual rights over their data.
Precisely.
Yeah.
They also faced some regulatory hurdles, FTC oversight, even antitrust stuff around 73.
And then the name change to Equifax.
Happened mid-70s, 75 or 76.
Yeah,
Maybe to improve the image a bit after those run-ins.
makes sense. And they kept adapting.
Constantly. They eventually phased out the insurance reporting side, spun that off as Choice Point later on.
Okay. And moved more into commercial credit.
Right. And then, of course, the huge shift after the 2017 data breach.
Yeah, that was massive news. They spent a fortune fixing things, didn't they?
Over $1.5 billion, mostly on moving to the cloud and beefing up security, plus a string of acquisitions.
Acquisitions? To do what?
Broaden their scope, really, moving more into digital identity and verification services. Around $4 billion spent since 2021.
So what does Equifax actually look like now? What are the main parts?
Fundamentally, three big business units. First, U.S. Information Solutions, or USIS.
Okay, what's that cover?
That's the consumer and business credit reports, analytics, marketing data, identity, and fraud solutions. About a third of their projected revenue this year.
Got it. Unit 2.
That's the big one. Workforce Solutions, or EWS. It's actually their fastest growing, highest margin division.
Really? Bigger than the traditional credit stuff?
Projected to be, yeah. Expected to hit over half their revenue soon. It used to be maybe a quarter just a few years back.
Wow. What does EWS actually do?
It's mainly built around the work number. That's their huge database for employment and income verification.
The work number. I've heard of that. How big is it?
Huge. Had like 152 million active records in 2022, aiming for nearly 190 million by end of this year. Covers maybe 70% of the U.S. non-farm payroll.
70%. That's incredible reach.
It is. And they're expanding it internationally too, UK, Canada, Australia.
Okay, and the third unit?
That's simply international, covers their operations in 24 other countries across Latin America, Europe, Asia Pacific, about a quarter of the revenue.
So focusing on finance, how do banks and lenders actually use all this Equifax stuff, especially that workforce solutions part?
Well, EWS and the work number are game changers for lenders. Think about applying for a loan.
Okay. Tedious paperwork, proving income.
Right. The work number allows for almost instant verification of your job and income. Cuts down processing time dramatically.
So faster mortgages, quicker car loans.
Exactly. It automates what used to be a slow manual process. Huge efficiency gain for financial institutions. Also used for government benefits, streamlining hiring.
So it touches a lot of areas. Let's walk through how a bank might use Equifax, say, when dealing with a customer like me.
Sure. It starts even before you're a customer. They use Equifax data for prospecting, finding potential customers.
Like marketing lists and stuff.
Yeah, pre-screening offers based on certain attributes. Then, when you actually apply for something,
Loan application time.
right, they pull your credit report and score, obviously. But they also use the work number for that income and employment check we mentioned. Plus, identity verification and fraud checks.
All through Equifax. Kind of a one-stop shop.
That's the goal for Equifax, yeah. Provide all that data quickly to make the decision faster and, ideally, safer.
And after I become a customer,
They use Equifax tools to monitor your account. watching for changes in risk profile, identifying opportunities to offer other products,
Cross-selling, upselling.
managing overall portfolio risk too. And even if things go south, they use Equifax data and analytics to improve debt collection strategies.
So really integrated into the whole life cycle. The benefits for the bank seem clear speed, risk reduction.
Efficiency too, through automation and helping them meet regulatory compliance requirements. It helps them build more resilient loan portfolios.
And potentially lend more responsibly by having a fuller picture.
That's the idea, yeah. Especially when combining traditional credit data with things like employment data or even alternative data points.
Okay, that brings us back to the technology. You mentioned the cloud investment after the breach.
Right, the Equifax cloud.
Mm.
And something they call their data fabric.
Data fabric sounds fancy.
Yeah. Think of it as like a central nervous system connecting all the different data pools. They integrated over 100 separate data systems into this one cloud environment.
So breaking down silos.
Exactly. Allows them to combine and analyze data more effectively, build new products faster, spot hidden risks or opportunities.
And AI fits in here somewhere. They talk about EFX.ai.
Yes, AI and machine learning are crucial, especially what they call explainable AI or XAI.
Explainable AI, why is that important?
Well, especially in credit decisions. You can't just have a black box algorithm deciding someone's fate. Regulators and consumers want transparency.
Right, you need to know why you got a certain score or decision.
Exactly. So their XAI, like something called neuro decision technology, provides reason codes explanations for the outputs. It helps with compliance and builds trust.
Makes sense. Now, we have to touch on the 2017 data breach again. It was such a huge event. What went wrong?
Fundamentally, it was a failure of basic security hygiene. There was a known software vulnerability they didn't patch in time.
A known vulnerability. Ouch.
Yeah. And an expired security certificate apparently masked some of the intrusion detection for a while. Just basic blocking and tackling missed.
And the impact was enormous.
Huge. Sensitive data names, birth dates, social security numbers, addresses for nearly 150 million people exposed.
The fallout must have been intense.
Oh, massive. Huge government investigations, massive settlements, mandates to overhaul their security posture completely. It really shook confidence.
A stark reminder of the responsibility these companies have.
Absolutely. When you hold that much sensitive data, the stakes are incredibly high. Security can't be an afterthought.
So looking forward, Equifax has clearly invested a lot in changing. What are their main priorities now?
Seems clear. Keep pushing the cloud transformation, doubling down on AI and machine learning, particularly that explainable AI piece.
And workforce solutions.
Definitely continue expanding EWS both domestically and internationally. That's their growth engine. They're also working with fintechs, exploring open banking where possible.
Still facing challenges, though, presumably.
Always. Economic uncertainty impacts lending volumes, which hits their core business. And the constant pressure to innovate while maintaining ironclad security and rebuilding trust, it's a balancing act.
So wrapping this up, Equifax is undeniably a central player in finance, far beyond just credit scores.
Yeah, their history shows constant evolution, adapting to tech and regulation. The focus now on cloud, AI, and workforce solutions really points to their future direction.
And that 2017 breach remains a critical lesson about data responsibility in this whole ecosystem.
It truly underscores how vital security and trust are.
It really makes you think about how much our financial lives depend on these huge data repositories. So a final thought to leave our listeners with. Given the sheer volume of our personal data held by companies like Equifax, what does genuine accountability really demand from them in this digital age?